Hey traders, coming to you from the future. It's 2021, where Bitcoin is at all-time highs, up in the $40,000 range. The video you're about to watch I recorded a couple years ago, but the lessons and the information presented are certainly still applicable in today's market. Feel free to ask any questions as you go through it. Thanks for checking it out.
All right, good morning, everybody. Thanks for joining us here Monday, Memorial Day, 10 a.m. Eastern. Thank you to everybody who has served and is serving. Let's talk about some cryptocurrencies. I'm going to be going over a lot of background information, how myself and others are currently trading this space, the GDAX interface and how to use it, and useful little tips for things you can pick up by looking at GDAX. Then we'll go over some questions and answers and see how much time we have at the end there for the charts. And again, if you could save the questions that you want me to see until the end, I'm not going to be looking at the YouTube chat until after I'm done running through what I've got here in terms of slides and GDAX. So let's get into it. Just the outline of what we're going to be going over. An introduction. We're going to go over the equilibrium pattern. If you've been watching the videos that I've been putting out, this equilibrium pattern is in every video multiple times, and it's a very clear pattern that you will see everywhere. It's in stocks, commodities. If humans are trading it, this pattern is present, and recognizing it can certainly lead to opportunities. So we'll go over that a bit. Going over the chart setup, what I'm looking at, the most important indicators I'm using. Go over the trading strategies that I have been using over the past month, and then we'll go over GDAX and how to use it and the information that you can gain there, and then again the questions and answers. So starting off here, the introduction. First off, the disclaimer: I am not licensed. I'm not telling anybody what to do. I'm giving my opinion on things. I'm saying what I am doing, and just keep that in mind. So I'm not some kind of financial professional here, and this is all for entertainment purposes only. You know that disclaimer. The most important thing about this entire presentation is education is essential. So if you try and jump into this space and do what I do and do what other stock traders are doing, it's going to most likely lead to losses. And this is something that is definitely something that I've been weighing, really. I've been having some moral dilemma the past few days. Are the videos that I'm putting out, are they attracting people that don't know how to trade to try and do it and in the end lose money? So that's something that I'm very concerned with, and I don't want anyone to do, obviously. I do not want people to lose money. I want to help people make money. So it's really, really important to me to stress that this should be a motivation catalyst for education. You cannot just jump into this space and start trading and make a lot of money and be successful. Otherwise, everybody would do it. And the analogy that I always use is, like, let's compare it to poker. If you did not know how to play poker, and you see the craze, everybody's playing poker on TV, you say, I'm going to go to Vegas, I'm going to sit down with some thousands of dollars, and I'm going to learn how to play poker at a real table. That sounds really, really dumb, and that is essentially what people are doing if they try and jump into this space. There's going to be sharks out there that are going to eat the new fish alive. You cannot just jump in and do this. So personally, I've been trading and studying technical analysis for 7 years. Back when I was first starting, I had a mentor who took me under his wing. He literally changed my life and answered every question I had. And that's a big motivation in what I do, why I put out all these free videos, because I'm trying to pay it forward. Because of what he did for me, if I can do that to one other person, then I certainly feel intrinsically rewarded and successful. So if anybody can gain the motivation to study and get this education and utilize it for profit and financial independence, that's my goal. So when I first learned technical analysis, I spent 4 months treating it as my full-time job. And that's, a half dozen plus hours every single day for 4 months, getting it down before I tried to jump in over my head. And in that time period, we're talking over 500 hours. So you know the statistic where everybody says, 90% of traders fail, 95% of traders fail, whatever that statistic is. I want to know the statistic. What percent of traders fail that have put in 500 hours of education before they start trading? People jump in, they want to get rich quick, and the vast majority of people lose money because they do that. We have a lot of people coming through with these videos, a lot of hype coming into the chat room. I can tell that there's two kind of people that come into the chat room. There's one kind of person that comes in and says, which way are we going? What's going to happen? There's another kind of person that comes in and says, how can I tell which way we're going? How can I tell what's going to happen? That's the person that wants to learn. If you have the motivation and the drive to educate yourself and you're investing in your future by educating. If I was jumping into this crypto space without any of my previous 7 years of history, I would not be doing anywhere near as well as I'm doing now. So I'm setting myself up for now and for the future and for the next 40 years You don't have to worry about retirement if you have the education and confidence to be able to trade. And that is what is essential here. So at this point, I have over 10,000 hours locked in doing this. So again, don't just expect to jump in and to be able to do this. Education is essential. And this video, I'm not going to be going over a lot of the basics of technical analysis. We have over a dozen hours of content, a lot of it free content, some of it paid content. It's all out there. So in terms of what today is going to be, it's not really going to be, what's a candlestick, what's an uptrend, and all of that stuff. So market environment. Right now we're in a market environment for the cryptocurrency space that is filled with hype and emotion. There's a lot of euphoria. We need to be cautious during moments of euphoria because we see things get overinflated. Everybody's talking about the potential bubble. In my opinion, the short-term bubble has popped. We saw that very significant pullback. That cools things off. That's normal and healthy in a market that runs so significantly to the upside. So this market environment is ideal for trading. And us stock traders who have been trading stocks for years see what's going on, and we jump in here, and it's really been, to put it bluntly, it's been very easy to trade because of, in my opinion, the hype and the emotion, obviously, the lack of experience. A lot of people in this place are not traders, whereas if you're trading in the stock market, you're against a vast majority of all stock traders. There's a lack of market makers and algorithms. They're still here. I'll go over what market makers are a bit more in depth when we go into GDAX, but it is a space that is so new that there's really essentially Wall Street doesn't have a firm grip on this yet. And as we know, there's a lot of stuff going on behind the scenes during Wall Street. And really, we're just trying to ride the coattails of the big boys and what they're doing. And that really hasn't happened yet in this space, but it is going to, in my opinion. We're going to see more and more of it as people do see the opportunity here and play with their big money and, shift things around. I don't want to use the word manipulation, but I mean, essentially that is what could happen. If you have, a few $1 million, you can absolutely manipulate the way that these markets are going. So it's very important when you're establishing your game plan for what you're doing. A game plan is essential before every single trade, and that rules out emotion. Our goal here is to eliminate emotion. If we're acting on emotion, people that are not acting on emotion are capitalizing off of us. So to do that, we need to have our time frame for the trade. If you're long in this space and you're looking at Bitcoin over a year out, my videos really don't have any benefit to you unless you're trying to learn technical analysis. In that sense, then absolutely, you need to be watching these videos and educating yourself. But in terms of acting and buying and selling, if you're looking a year out, you have your game plan set. Don't let the short term, dictate what you're going to do. That being said, you need to have an exit point. Everybody needs to have an exit point. If we hit this level, I will sell. That lets you know the absolute worst case scenario, how much money that you are going to have. And when you hit that point and you stop yourself out, you can always just take a step back, analyze the situation, reassess the situation, and be able to jump back in later once things settle down or once an uptrend hits back going forward to the upside. But it is so essential to have an exit point and a stop loss level. And even if it's not, it's more beneficial to have it as a hard level that's actually, an order placed. But if it's just a mental level, you just have to stick by it. Because if you don't stick by it, I cannot tell you how many times people are just left holding the bag in stocks and in this market because they didn't honor stop loss levels. They never had a stop loss level. And I've been there. Trust me, every single mistake that I'm going to be telling you about, I have made multiple times. What makes a good trader is being able to react to those mistakes and continue forward and progress off of them and not make them as often or ever again. So I've certainly held the bag. I've not honored stop loss levels. I've not had stop losses. And I know that sickening feeling as it continues to drop and you continue to see your money lose. And then you have that whole mental game going on. Well, it's going to go up in a bit and we're going to have, earnings are going to come out or it's catalyst is going to happen and it's going to save the day. And it just gets worse and worse and worse. And I will never trade without stop losses again because I experienced that sickening feeling so many times that the stop loss level really was the game changer for me, where I stepped up my consistency and was able to do this longer term and keep those losses similar. There were so many times where I would make 5 winning trades and give it back with 1 loser because I didn't have a tight stop loss. So the game plan of your trade is absolutely essential. Even if you don't have one right now, at the end of this video, go down and write down, okay, this is the level I'm going to exit. This is my profit target. We need either a year. If you're looking, in time frame and you want to say 5 years, that's fine. But profit targets are also essential as well. If you say, okay, I'm up 200%, I'm going to take my profit and be happy with it. That's also a game plan to have established. And you need to stick to these game plans and honor them, again, to eliminate emotion. That's so essential. So let's actually do chart setup first, and then we will go into this equilibrium pattern. So I'm going to pull up here TradingView.com. So TradingView.com has a free chart service that is very good. And I personally pay for the first tier of chart service. I forget what it's called, but it just gives you a little bit more in terms of workability. But this is what everybody should be using, in my opinion, because it is so easy to draw on. It's so easy visually, and it's really good to be looking at, obviously, for direction. So what you want to do here for tickers, it's ETH/USD, and you want to select Coinbase if you're trading on Coinbase. If you're trading on Kraken, you want to select Kraken. There's different sources here, and the prices don't always line up because they're their own individual markets. There's not one global worldwide market at this point. Each different exchanges have different prices. They do track each other very, very closely, but there are subtle differences. So I'm trading on GDAX, which is Coinbase, so I always select Coinbase, and this is the same thing, BTC/USD or LTC/USD, and then you select the drop down that is linked with your exchange. So right now, I was just watching this 5-minute pattern on ETH. Looks like we're fairly close to a bullish break. We had a little bit of a fake out here, and now it looks like the bulls are going to try and head back to the upside. So I really like this because of the scrolling. I mean, you can just zoom in and out so easy with the scroll of a mouse. You switch time frames. So I really suggest TradingView as your charting software. And also, the main indicators that I'm using here trading. My trading style for this crypto space is different than stocks. With stocks, I'm using moving averages all the time. That is one of my most important things. I'm not using moving averages in this space. I find that due to the emotion and due to everything that's going on, and also due to the fact that not as many people are using technical analysis. Technical analysis is a bit of a self-fulfilling prophecy in the sense that the more people that are using it, the more it's going to adhere to those rules. So if I'm watching the 200-day moving average as support, and I'm placing buy orders right at that level, it's going to make it act as support. And let's say 100 other people know technical analysis and they're using that same support level, that level is going to be stronger. In this space, there's less people using technical analysis, so these moving averages aren't really as key and important. The main indicators that I'm using is RSI. RSI is the #1 indicator. If it was the only thing that I could use, that would be one of them. And it is because how consistent it has been this entire time. On the way up, there's two distinct trends that we've been in, and I'm going to go over different styles for both. But we had the uptrend, obviously, where money was growing on trees, and now we have the pullback. So on the uptrend, very, very consistency, the 5-minute time frame would very often, and pretty much every time, if you're buying with the 5-minute RSI dipping under 30 on the way up, you are making money 9 times out of 10, probably even more than 9 times out of 10, probably every single time on that uptrend. The RSI, and you can go back historically and just look at it, but when the RSI dips below 30, you buy and it bounces. That just happened every single time on the way up. And now on the way down, it's a little bit different. Now it's hitting 20 RSI. So now once it hits 20 RSI, I'm buying everything, and we see short-term bounces, and I'm flipping those bounces within about, I'd say 15 minutes to an hour, and just steadily locking in gains. I'm leaving money on the table sometimes. I'm saving myself from pullback sometimes. But if I can just consistently lock in gains every single day, that's all I can hope to have as a goal. And it's been going really well just using this RSI. You can see just recently, we dropped down, we hit 20 RSI on ETH here. We went from 167, and less than a half an hour later, or less than an hour later, we were up at 173. So there's really short-term, nice gains from oversold conditions. When the RSI gets under 30, it is oversold. The #2 indicator that I use is the price levels. I'm always looking at the price levels. Anytime you hit a level and pull back, it's resistance. Anytime you hit a level and bounce, it is support. So just recently here on ETH on the 5-minute, 175.20 is support. This low we just bounced off of. Nice bullish reaction there to that support. And where we have pulled back in the recent past, 178.86 and 179.60. These are resistance levels. So price levels are key. I draw trend lines for visualization to help me look at things, but it's price levels that are much more important to me. So I'm pulling up the hourly time frame now, and I'm looking to see that if we break over 179.60 and the 180 psychological resistance, there's not much resistance until up at 185. So I can confidently say that if we break 180, The bulls should see an easy $2 to $3 move to the upside before we see some battle at the 185 resistance level. And that $2 to $3 move is enough to lock in some short-term gains. Or you could be looking at, again, it all depends on the time frame of your trade. If you're looking to hold for hours or for 5 minutes, that determines which time frame you're looking at. If I'm a swing trader and looking at day positions, holding for multiple days, I'm looking at the daily chart. If I'm a day trader looking for short-term flips, I'm looking at the hourly and the 5-minute. If I'm a long-term trader, I could care less about the 5-minute chart. It doesn't mean anything to me. So it all depends on what your game plan is. Right now, as we head into tonight, this afternoon and tonight, the bulls need to break 185 to be looking really good on ETH for continuation of this higher low and higher high pattern ever since we hit this low of the pullback with that little climax down at the bottom, down to 115. So price levels, RSI. Next is volume. Volume is very, very important. If you've seen the videos where I pointed out volume climaxes have been signaling the tops of uptrends on the daily time frame and the bottom of downtrends, bottom of bounces on the hourly time frame and the 5-minute time frame. I'll always look for these volume climaxes. What the volume climaxes show you is a big time battle between the bulls and the bears. It shows you the last push by the bears to the downside, and it shows you the bulls jump in and start to significantly buy the move back to the upside. So I can see here on the hourly time frame, we had this volume climax where we dropped all the way down to 140, and then 2 hours later, we were up at 179. Those are huge gains in the short term. Granted, that was not the bottom, but it was a temporary bottom, climax volume, signaling that that was the case. And this has happened multiple times. Most recently, down at the low here, that was one of the highest volume candlesticks that we had seen in hours, and it's been all uptrend since then. So RSI, price levels, volume, also this MACD. I don't make any trades based off of this MACD, but it's the fourth in my indicator list in terms of usability, and I do pay attention to it. If I see a bullish MACD cross, I have some nice confidence. When this blue line crosses the orange line to the upside, that's bullish. When it crosses it to the downside, that is bearish. And you can see when it crossed bearish here, we consolidated for 4 hours, and when it crossed bullish, we saw 10 hours of upside. So there are some decent indications given by reversals in trends on this MACD, and you can use that on the daily, you can use it on any time frame. It does have some importance. So now correlations. Correlations have been very important here with Bitcoin and ETH, and really the whole space. Sometimes, more often than not, Bitcoin is the leader, and the other two, I'm referring to the big three as ETH, LTC, and BTC. Everything else is an altcoin as far as I'm concerned. And so the big three have been correlated to Bitcoin. When Bitcoin goes up, the other three go up, or the other two, I should say. And it's it's down to the 5-minute time frame. You can look at the 5-minute time frame, and there are subtle differences, but it's pretty much very, very similar charts. So right now is a good example of subtle differences. Here's Bitcoin with lower highs and lower lows, and you can see ETH is a bit stronger. And this is a change in the correlation, and there are changes in this correlation that you can note if you're paying close attention to these shorter term time frames. And I've been noting a change in the correlation with ETH being a bit of a leader on this bounce. ETH has had a stronger bounce, and I pointed that out in a video recently where the daily time frame, the lower wick on this bounce for the daily candlestick showed the bulls buying this dip on Ethereum more significantly than it did on Bitcoin. Look at the size of the wick compared to the real body of the candlestick on Bitcoin compared to ETH. Look at the reversal candlestick day. We're well above that level with our higher high seeing follow through. And you look at Bitcoin and we haven't broken the high of that day yet. So there are some subtle differences. And I would absolutely say without a doubt that Ethereum's dip over the past few days is being bought more significantly than this Bitcoin dip is. That being said, the correlations are still very strong to each other. But there are these subtle differences. I have used over a dozen times in my trading over the past month, seeing something happen on Bitcoin and jumping in and playing ETH, looking for a slight laggard response, and vice versa, seeing something happening on ETH and jumping in and getting a slight heads up on Bitcoin. So these correlations, if I'm trading Ethereum, I've got the Bitcoin chart up on my other screen and I'm watching what it's doing while I'm watching Ethereum, and vice versa. It's very invaluable information, just the subtlest clues that you can be watching for that can help give you a little bit of light in terms of the short-term action and what is going to happen. So let's get back now to this equilibrium pattern. So this equilibrium pattern is everywhere, every time frame. It's pretty much human emotion and trading summed up as one chart pattern. It is everywhere. The macro version, it's referred to as inside bars, and we're developing a website, insidebars.com, for alerts on this system, and we are working on getting some crypto data in there as well. It's in the beta stages of development, but we are working on that because it is going to be, in my opinion, some really useful automatic trade alerts generated based on this pattern that happens all the time. But the macro version is these inside bars, and this is the micro version. So these two things can show the exact same thing. This would just maybe be the daily chart. This would be the hourly chart, or maybe this is the hourly and this is the 5-minute. So it's essentially when you're going to the micro version of things, you're taking a magnifying glass and you're getting more details. You're getting our higher low and lower high tightening pattern. And again, if you watch these daily videos that I'm putting out, I am talking about multiple ones of these patterns very often. And I think we're forming one right now on the daily time frame. We'll look at that a bit at the end. But higher lows, lower highs. And then if you zoom out for the longer term time frames, it shows up as just inside candlesticks. And the inside bars are when the range of the candlestick fits completely within the range of the previous candlestick. So it's showing the exact same thing, just on a different time frame. You can see our higher lows and lower highs, and we watch for the break of that pattern to indicate momentum and indicate direction. So it's marked by consolidation. It happens after a big move in one direction or the other, either a big breakout or a big drop. We see this equilibrium pattern as the market settles down. It's really the market taking a breather and the bulls and the bears battling it out and seeing a tight range form. It's marked by lower volume. You will see declining volume. And again, we'll look at some examples here towards the end, but declining volume as things tighten. And I always say when I highlight this pattern coming to a head, coming to a flex point is what I call it, it gets tight to the point where it can't get any tighter and you know a break is coming. And I refer to this almost as a rubber band in terms of an analogy, where you stretch a rubber band tighter, 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 and eventually it just snaps. And we get that big breakout to the upside or breakdown to the downside. So I will always say equilibrium pattern forming, break imminent. And the people who are not familiar with this pattern, the first question they ask me every single time is, which direction is it going to break? Now, I don't know which direction it's going to break, and I don't care. If I'm trading a stock and I can play it bullish or bearish by going long or shorting, I could care less which direction this breaks. I'm going to play it whichever way it breaks. Now, in this space with cryptocurrency, I'm not shorting this space. I'm only playing long, so obviously I'd like to see bullish breaks, but I never will get in before the break occurs, hoping that it's going to go in my favor. I always wait for the break, and I wait for that because it comes with a spike in volume, and it comes with momentum. When I see a break of this equilibrium pattern and I get in on the bullish break, my trade, more often than not, is instantly profitable. And when you're instantly profitable with momentum at your back, it is so much easier to manage your trade, and you can set yourself a stop loss at break even and see how much upside you can get from there. And that makes it obviously a much more comfortable trade than if you're getting in during the equilibrium pattern and hoping it breaks in your favor. And then if it breaks to the downside, you're instantly in a fairly decent loss. So you need to wait for momentum and volume to be at your back on a break of this pattern. So again, I draw the trend lines for visualization, but it's the break of the price level that I'm concerned in to show that momentum in the bull break occurring. And again, we'll look at some specific real life example of that. And I don't even have any planned out. I know that I can look at the ETH or BTC chart and find a dozen of these patterns anytime from the past week of trading. So chart setup just did that. Trading strategies, what I have been doing, how I have been playing this space, I should say, in the past month. It's changed. Your ability to pivot and adapt and be agile as a trader is very important. If you only have one little skill set, if you're only comfortable trading gold, let's say, you're really limited in your scope. If you can be trading gold and then you say, oh, Apple stock is breaking out, I'm going to jump into Apple, and then oil is going down, I'm going to short oil. Being able to jump around where the action and the momentum is very important. And I've been doing this my entire trading career. Essentially, my entire trading career is summed up as blitzing. What I refer to as blitzing, meaning going at hard. What I'm doing right now to this crypto space, I'm blitzing it. I'm going at it hard. Initially, I put in an amount of money where I wanted to, get used to the exchanges and start playing. And when I saw the blue sky breakouts and I saw the action that was occurring, I instantly put 1,000% more money in to blitz this sector, blitz this opportunity, because I know this only comes along once every few years in terms of the amount of short-term gains that you can see here. Now, in my 7-year trading career, I've seen this happen 3 times. It happened with the US MJ sector in 2013. It happened with the Canadian MJ sector last fall and winter, and now it's happening in the crypto space. So my career has been being patient, consistent, and conservative with my trading, when we're in periods with things like this not going on, when I'm just trading stocks, I'm not trying to hit any home runs. I'm going with base hits. I'm going for consistency. And then when I see these opportunities come along, I blitz them very hard, and I go for the home run when this is happening, because it's a different market environment. And again, it doesn't happen often. It happens every couple of years, and we've been pretty lucky to have US, or I should say Canadian MJ and crypto happening in the same year, within a 7-month time span. We're really fortunate for that to happen. So I do believe that at some point within the next few months that this crypto space is going to die off. I'm not calling for a dump or anything like that. I'm just calling for it to lose its hype and momentum. I'm looking for longer, drawn-out consolidation. You can look at the Bitcoin long-term chart and see this has happened many times throughout the years, where we see huge hundreds of % gain spikes, and then we consolidate with really little action for months and months at a time. And I do believe that's going to happen in this space. So that's why I'm trying to strike while the iron is hot, and I'm blitzing this space. So my style one on the way on the uptrend, when things were, like I said, money was growing on trees, where it was just going up for days and days and days, hundreds of %. It was a completely different style than what I'm currently using as we are consolidating and pulling back. So on the way up, I would buy resistance breaks. Anytime you see a blue sky breakout, and a blue sky breakout means you're hitting an all-time high. That means there is no previous price history resistance to be going off of, and it's very easy for the bulls to run the price when that occurs. So every time there was a blue sky breakout, and this is the same for stock market too. The stock market right now is at all-time highs, and we have so many individual names hitting their blue sky breakout, and just buying when that blue sky breakout occurs gives you really short-term gains as the bulls have all that momentum. So on the way up, every single time we hit a new all-time high, I was buying and seeing that move to the upside and seeing the momentum that followed with it. I was also buying the 30 RSI levels, the oversold 5-minute, as I pointed out. It was much easier to let it ride. And that's a very important distinction between these two trends. Because when you're on that bullish uptrend to the upside, and you maybe get in a position and then it pulls back and you're in the red very quickly, it's much easier to let it ride and just be patient, because the trend is so strong that more likely than not, you will not be in the red for long, and the bulls are going to show up and you'll be profitable soon. That is not the case anymore, and we need to be a bit more cautious because of that. So style 2 here, trading this pullback, I'm holding shorter. I'm locking in my gains quicker, and I'm not seeing as significant gains. Gains to the upside would be, in style 1, it would be easy to see a 10% move. Now, if I see a 5% move on this current pattern that we're in here, the past few days of consolidation, I'm going to be more inclined to lock that in, because these bull moves are not lasting as long. We have some bearish action. We have pullbacks. And like I said, now the RSI levels are hitting the 20s. That is new. We were not really hitting the 20s on the way up because of the strength. Now we are. There's still nice bounces off those levels, but I'm a bit more patient buying these oversold dumps than I was on the way up. So in and out quick. Do not miss an exit. Take the loss. When we are in this consolidation pattern, like I said, we don't have the let it ride theory unless you're looking longer term. Again, if you're looking a month to a year out, again, this does not pertain to you. If you're looking shorter term, take that loss. Take the small loss. The size of your losses dictates whether you're a good trader or not, in my opinion, not the size of your wins. So if you can keep your losses small, it is much easier to get those back than it is if you're stuck holding the bag. And here's a perfect example. Let me pull up these charts again. This happened with Ethereum yesterday, and I had a losing trade. And again, I'm having much more losing trades on the way down than I am on the way up, trying to play bullish. But again, I'm keeping them small and making sure the winners are bigger than the losers. And that's the thing with technical analysis. You're going to lose a lot, and every trader loses all the time. It's just about keeping those losers small and having more winners than losers. That's really all it is. And if you can manage your losses, we had a new member come in when we were trading stocks, and he went 2 for 7 one week, 2 winners and 5 losers, 2 out of 7. And he went break even. And that's because he was able to keep his losses really small and let his winners ride a bit. So to be able to go 2 out of 7 and go break even, you're managing your stop loss as well. So here on ETH yesterday was a perfect example where I was in a trade and I was looking for a bullish break here. I made a bullish entry here off of support. This was support here. We had our low, and I was looking for the bulls to try and break this lower high pattern. I liked the consolidation that was going on here, and I got in at about 175, and I looked for the bulls to make a break of this resistance of 175.74. We got up to 175.75 and rejected, so that was a double top, unable to break resistance, and then we pulled back. So I had my stop level. I said, okay, if we break 174, I want to exit this trade. And so we got tighter and tighter. This candlestick right here, I can see a lot of volume, and that's because we had a big bid at 174. There was a lot of people looking for ETH at 174, but it started to get chipped away at. People were selling into it. So I sold into that as well. I took my loss. I exited at 174, and then we dumped. And because I exited with my loss, I had cash available to buy this oversold dip with the RSI hitting 20 and make my loss back and then some. I think I made my loss back, and then I made that number again back to the upside in profit. So if I had not exited, I would have pulled all the way back. I would have been deep in the red, and I would not have been able to play this bounce. Now, granted, it would have recovered eventually, but that would not be a good example of putting my money to work. Whereas because I exited, I had the cash available to buy down here and get that oversold bounce for profit. And that's a nice example with the RSI level off of 20, which it has been doing very consistently. So those are my trading styles currently, and again, it's going to shift again. It's always shifting based on what I'm watching and based on my trading game plan, and I do my best to keep everybody informed with my style and what I am doing. So let's now look at one more thing I want to point out, because it's important to be, well, actually, let's go to my game plan, and then we'll point out devil's advocate. I definitely want to give a word of caution. But first, we'll look at my game plan. So my game plan in this market is I'm starting to move my profits around. It's been a really nice month with ETH and BTC. I traded LTC a bunch. I've noticed that more of my losers are in LTC, so I just stopped trading it. It's that simple. Keep track of your statistics. Your statistics as a trader are very useful. For example, I found out a few years ago when I was trading stocks that I would do really well in the morning, and I would give my profits back in the afternoon. So when I was a full-time trader by myself, I would just stop trading in the afternoon. I would cut that out. And noting your statistics, if you have your worst days on Wednesdays, don't trade on Wednesdays. So for me, I had more of my losses in LTC. I stopped trading LTC. Plenty of opportunity in ETH and BTC, but being able to recognize that and keeping track of how things are going really allows you to just cut some corners and increase your efficiency as a trader. So my current game plan is to start moving around profits. So it's been a really nice month with ETH and BTC actively trading it, but now I'm moving things around. I'm moving into some of the altcoins, and a big theory and a big strategy that I have seen play out in the MJ sector. And again, I'm going to continue talking about the MJ sector because it is the closest correlation in terms of market euphoria and strength with what we are currently seeing in this crypto space. So a big strategy in both the US and the Canadian MJ runs, which again were separated by multiple years, was watching the leaders run, and then as we start to see some profit taking and we start to see things cool off, watch the laggards. The profit from the leaders goes to the laggards. And you see this in the stock market all the time, where if you see the lead tech name, maybe Apple runs big, you look down to the other tech names that have not run yet, and you look for them to be a laggard. So I'm doing that right now. I'm choosing Gollum. I actually had a couple of the altcoins with my profits. I put about 15% of my total profits on the month into Gollum, and that's because there's some fundamental rumors going around with the potential for them to be added to Coinbase. It's all rumors at this point, but I do like the potential risk to reward. And again, this is a high risk. I call these lotto plays, where it's very high risk, high reward compared to what we are seeing with these big boys with ETH and BTC. So it's a scenario where if the rumors were confirmed and Gollum were to come on Coinbase, I would expect a 100% move from where I currently stand. If it were to come out that the rumors were false and it's not going to be added, I would expect to see a 25 to 50% drop in the short term as everybody bails. So that's what I mean by high risk, high reward. And you'll find that risk and reward are always correlated in the market. The lowest risk gives you the lowest reward. You got your your basic dividend distribution stocks that don't see a lot of movement. They're your lowest risk. They're going to be your lowest reward. Penny stocks, highest risk, highest reward. So that's the case with this Gollum here. And my game plan here is going to be to sell the first day it lists on Coinbase, assuming that it does. And LTC, the first day it listed, went 100%. So we have a nice little guide to be watching in terms of what LTC did when this all happened. And we're looking for Gollum, the same thing to happen there. So I would be looking to sell the first day listing on Coinbase. I'm looking for a 100% move, and I will hold it until then. That's my game plan. So I'm not basing my exit on a profit number. I'm not basing it on anything but time frame. And that was essentially what I did with the top here in this space with the sell the news reaction to that conference when we dropped 27% in a couple hours. It was based on the conference, not the technicals in terms of me looking for that pullback. So same thing here. I would take my profit the first day of listing on Coinbase. And so far, we've seen some nice action in Gollum. It's at all-time highs as of yesterday. So the lack of resistance, I'm liking the chart setup, and I'm going to let that one ride for a bit. Next, I'm going to be shifting my profits into the Canadian MJ space. And again, we saw the huge move, hundreds of percent gains, end of last year into the Canadian MJ market. And we now have more of a time frame dictated by the government. It's federally legal, recreational in Canada. And in 2018 is when the doors are going to open and these companies are going to start getting their first recreational revenue. And in my opinion, this is a great opportunity because we have a bubble that bursted in Canadian MJ. And in the past 6 months, we've pulled back 50%. So back then at the end of the year, I would never tell people to go long because of how extended we were to the upside. Just like in the crypto space in one of my videos before the pullback, I said it would be irresponsible for me to tell someone to go long up here because we are due for a pullback. So same thing with Canadian MJ, and it has pulled back for 6 months. I think the timing is going to be so ripe here to move profits from crypto if we see things cool off, which I anticipate we will, into the Canadian MJ space. Canadian MJ is going to be a 1 to 5 to 10 year investment. I think it's really, really easy gains to the upside. I'm looking for short-term 25% move, so I will be moving a significant amount of my profits. I do Canadian MJ videos all the time as well, putting out one a week. Currently, I put out over 100 over the past 6 months. I'm watching that space like a hawk. We're in a downtrend still. We're seeing lower highs and lower lows. I am looking for the trend reversal, and I will move my crypto money into these Canadian MJ names. I always want my money to be working for me. So if something's cooling off, if momentum is gone and we're consolidating, I'm taking my money out and putting it where it's going to work for me. And I really feel the Canadian MJ in 2018 through 2020 and beyond is going to be a really nice investment opportunity. And I'm going to have people be all over that with me. So devil's advocate. There's a chart I want to post here. I'm not saying this is going to happen. I'm not trying to cause fear. We just need to be prepared for anything. So this is a chart down here that was started to float around the Canadian MJ space towards the top. And what you have here is the stealth phase, smart money before anybody knows anything, getting in. Then we see it start to get its first attention. Institutional investors are coming in. That's the awareness phase. This is a good chart to keep an eye on and study. I would say that I made my first crypto entry right about here when we hit our new all-time high and before it took off with mainstream media. This is now our mania phase, euphoria phase. This is when the public is getting on board. And obviously, the whole general public is not into this crypto space. It is not widely accepted by any means in terms of the upside potential over the next decade. It's still huge. But just in terms of the short-term reaction here, once CNBC starts talking about Bitcoin, that's a red flag to me. Once people on my Facebook feed start talking about cryptocurrencies that I never would expect would, that's a red flag to me. These all show to me that we are in the area here of, overextension, over euphoria. Just like there is fear when we see dumps and things are way low and way cheap, we see euphoria in the opposite direction. So looking at this chart is from Bitcoin. It's not updated for the past few days. It's about a week ago. It's possible. I want to be prepared for this scenario if we were to see this play out. It did play out on Canadian MJ. We didn't have the dump like this. It was more drawn out and more contained, but it did pull back 50%, and it was just not as steep. So potentially, we would be in the phase right now of return to normal right here. We hit our high, we pulled back, we dropped our 27% very quickly. People call that a bull trap where everybody thinks, okay, time to get back in. We're going to higher highs. And then we set a lower high and continue to pull back. There is this possibility. I'm not saying it's going to happen. I am going to be prepared for it to happen, and I'm going to not be married to this space in the short term. I'm going to move my money out if I do see this occurring, and I'm going to be putting it in other places. So just want to keep this in perspective. There is a possibility that this could happen. So let's now go on and check out GDAX, because GDAX is where I am doing my most active trading. And I think that it is, I can't speak to Kraken and other services because I have not traded them. But I'm very pleased with the way, here we go, the GDAX has been in terms of trading. So there's a bunch of things that we need to look at here. It's very intimidating if you're new to trading. There's a bunch of flashing numbers. What does it all mean? And I'm going to try and break it down a little bit, get a little bit more clarity as to what we are looking at, because there are things and there are clues here that we can be looking at in terms of the, getting little clues and making things easier for us in the short term. So first off is right here on the left, all these flashing numbers. That's what's catching our eye first because of all the moving numbers around. This in the stock market world is called level 2, and it lets you know it's essentially supply and demand. It bids. This is the bid. This is the ask. So what you can imagine people here. Here's somebody who wants 10 ETH at a price of $178.45. He's saying, I am willing to pay this much for this many ETH. Then you have somebody up here saying, I want to sell 89 ETH for this price. This is the market. So this is your buyers and your sellers. And if we were in the old days, back in the 80s and 90s, on the stock market floor in the pit, this would be people screaming at each other, raising their hands up, and placing their orders that way. Thank goodness we do not have to do that anymore with technology leading the way. But so what we can see here, there's some clues that we can pick up. So all these flashing numbers, these are algorithms trading, and they're positioning themselves, they're moving in and out. You can tell what's an algo and what isn't by, see this 89, it's just sitting stagnant. That's a real person. That's someone who wants 89. And everything else, all this flashing around it, that's just positioning the bid in the order, or I should say the bid in the ask, just bouncing around. And you look at the spread here, that shows you how much money or how much space is in between the top bid and the lowest ask. And you'll see these algos tighten that bid up. When it gets really wide and it gets a wide space between the bid and the ask, you'll see the order sizes here are very, very small. 0.01, that's essentially, let's see, that's 0.1 would be $17. So 0.01 is $1.70. So I know there's not somebody sitting there saying, I want $1.70 of ETH. That is the market being created by these algos. And normally in the stock world, market makers exist. And a market maker is a person or an entity that holds many, many, many shares of the underlying stock. So let's say we're watching Facebook trade, and this is the level 2, and these are the bids and the asks. There's a market maker out there with thousands of Facebook shares, and they're ensuring the matches between buyers and sellers, and they're keeping the market nice and contained. So there's not as much crazy volatility because this market maker is sitting there with all these shares and keeping a nice, orderly process of things. We do not have market makers in this space right now. We have, some forms of market makers, and that's what you're seeing with these algos. They are keeping it tight. But when we see volume and volatility really pick up, there are times where we can see a $2 spread between the bid and the ask here on ETH. And that's because there's not somebody sitting there with, 10,000 ETH. And as soon as the spread gets that wide, they're going to put their own shares, so to speak, their own tokens on the bid and the ask to tighten things up, contain the market, stop it from being so crazy. And because we don't have that, that's why we're seeing so much craziness in this market and so many surges in one direction or the other very quickly. That's why this volatility is so high. So on the right side here is time and sales. This is the actual orders going through. So I can see that someone just bought 50 at $178.50 and it's green. So that means that they bought it on the ask. So that means they hit a market order to buy those tokens. The red tells me someone's selling into the bid. Now, what this information can give me is I can see, obviously, who's buying what. And it's important to pay attention, not the number of trades, not the frequency of things, but the number in terms of size. And I can see right now someone just made a decent purchase and is buying at the ask, and the price is going up because of that. So I can scroll down here, and I can see that someone just hit the bid, and there were a lot of red numbers here, but every one was for 0.01. So I know they're very, very small trades. And I can compare that. I can see someone selling 0.01, 0.01, 0.1, and compare it to someone who's buying 39, 64, 43. So this tells me that there's a lot more buying pressure in this current state then there is selling pressure. And there's oftentimes these algos will try and manipulate things in terms of making it look more bearish than it is by just continually hitting the bid with tiny amounts of tokens that aren't really moving the needle. And it's the size that you want to look for in terms of clues as to which direction the momentum is currently going. Along with that, you want to be looking at the size on the bid and the ask. If you see a bunch of bids start building up, 100 here, if we were to see a 500 bid, if you were to see a 500 bid show up at 178.80, you would instantly see people start buying the ask. And that's because they're confident buying the ask with a big bid down here to back them up as support. So I can tell right now that because these 100 bids are starting to form, that the bulls have momentum here. And then I look at the chart and see that we're at the highest price that we've seen in a couple hours now. So that aligns with what I'm seeing. And in terms of, see, I can see more bids now are coming in. The bids are building. People are going to start continuing to hit these asks because of this bid support. You also need to be aware that they move around. There's fake walls. And a fake wall would be something, let's say someone puts 500 ETH on at 180. And then as soon as the bulls start buying that 180 and chipping away at it, then they pull their order and it disappears. And that's someone making it want to seem like there's a lot more resistance at that level. Nice bull move here. I was actually in ETH right before I went live, and I sold everything because I didn't want to be thinking about it in the back of my head. But this is the move I was looking for. If we break 180 here on ETH, we're looking up towards 185. So there's some nice bull momentum here, but it's a key resistance at 180. So you can see it's all green. It's all buying here on the time and sales right now. And we've got 120 just bought. That's a nice big order. Anything over 100 is pretty significant in terms of conviction and direction and momentum. So the fake wall that we see oftentimes, and there's fake bid support as well, if that gets pulled, that just means someone was putting it up there to give the fallacy of support or resistance. And then once the ETH actually started filling that order, they pulled it. You can also see things stacking bids and asks. So I use this information as to where to put my buys and to where to put my sells. So let's say right now I was in ETH from 175 and I wanted to start taking some profit. See this 303 here, 389 now at 180. I would put my sell at 179.99. If I put it at 180, I'm getting behind the line of 389 other ETH that need to get bought before my order gets filled. If I give up 1 penny, I will be filled before any of that 389 is filled. So I can position myself based on the orders that I'm seeing in terms of who's going to get bought first. And I want to always go just under big orders. Conversely, if I'm looking to buy in and I see someone bidding 100 here at 179.90 and I want shares right now, I'm putting my order at 179.91. So my shares, my tokens, will get filled before anybody at 179.90 gets filled. So I will constantly be using the bid and the ask sizes as to where to put my exits and where to put my entries. Now, another style that I pointed out in my videos is scaling in and scaling out of trades. If you're playing with a small position, you don't need to do this. You can just do it all in one go. But if you're trading with some bigger positions, let's say you want to buy, 300, 400 ETH. I'm not going to be buying those all at once. If I see a dump occurring on the 5-minute time frame and I know the RSI is starting to get oversold, I'm putting a bid in at, 178.01. And I'll always put my bids and asks apart from psychological numbers. So if I'm looking to buy in at 178, I will always put it at 178.01 or 178.05 because I know other people who aren't as keen on this are going to just be putting their orders at these nice psychological round numbers. Looks like the bulls are going to break this 180 level here. All green buying on the right side here. So you can see there's very little selling pressure right now. Just need 355 more. As soon as we break this level, we should see a very quick $1 move to the upside instantly because of that. So a strategy that I would use right now, let's say I think we have a lot more upside in the short term. This wall, let's say I wanted 200 ETH. This wall has 342. I'm not confident that we're going to break this wall right now. So I would be sitting here with my order filled out. I would have my market buy. I would have it all filled out. All I have to do is click a button and I'm in. And I'm waiting to, right now I'd hit it right then. So I just saw that get purchased. I saw it get taken down under 300. I would buy my 200 right now, and then other people would see that 200 get taken off. They would buy the rest of it, and then we have bull momentum to the upside. So I will use market orders. Market orders come with a fee. I've spent, $300 on one trade in a fee before, but the profit, far outweighs that, so I'm able to shake it off. But if you use a limit order, you don't pay fees, but there are scenarios where I will use a market order. This would be one. If I want to get in on a resistance break, I would buy the last bit of this wall. So say it's 1,000 wall and I want 200. I'm waiting. I'm sitting there with my order filled out. It gets chipped down to 900, to 800, to 700. I'm still patient. It gets chipped down to 300. Then I hit my buy. I buy the last end of that wall. So I know the bull momentum is right at my back. We're going to break that resistance right after I get in, and we're going to see follow through to the upside. Opposite, there is the same thing with the bid. If you see a big bid, let's say there's a big bid at 179 right now, and I say to myself, okay, if we don't break 180, I want to bail on this trade. I want to lock in my profit. And so I'm sitting there, and I have my order, my sell order filled out at 179. Let's say we have 500 ETH at 179. As it starts to get sold into and starts getting chipped away, down to 400, down to 300, I'm bailing, I'm selling into that bid, and I know that as soon as that bid drops, we're going to see $1 or $2 dump to the downside very quickly. So I obviously don't want to hold through that $1 or $2 dump to the downside. I will take out the last bit of that support to ensure that, yep, it is going to break. I want my cash right now. And that is a way to play these walls using market orders. Obviously, in an ideal world, you're using limit orders and not paying these fees. Let's see how quickly, watch how quickly you go to 181 right here after 180 breaks. And this is momentum. So scaling into orders with 50 cents in 1 second. So that's another thing I'm doing. If I were wanting to buy that 180, I'm scrolling up and I'm looking at how many tokens are on the ask at the next level. So I can see to myself and say, okay, the next major resistance is going to be up here at 180.50 and then 180.94. So I know we're going to go 50 cents very easy before we encounter the next significant amount of ETH that needs to get bought. So if I'm looking to scale into an order on a dump, let's say we're dumping and I see the RSI at 30 and I want to start scaling in. I'm going to break up my position into 4 distinct lots, 4 different orders, and I'm going to place them on the way down. I'm going to place one, let's say 176.01, 175.51, 175.05, and I'm just placing them on the way down as I go and watching to see them get filled. And then on the way back up, I'm doing the exact same thing. I'm selling at 179.99. I'm selling at 180.49 and just scaling out on the way up. I'm not trying to time the top and the bottom. It allows me to go with momentum. It allows me to spread risk essentially a bit by breaking those orders up. Let's see here. Fake walls. Another thing I'll do when I'm scaling positions, let's say I am buying an oversold bounce, I'll scale in, let's say 3/4 of my position, I'll get on the bid. And then I'll take 1/4 of my position, let's say I want 100 more ETH, I will wait, and I will wait to buy at the ask in a market order and pay the fee intentionally to help the bulls gain that momentum and convince everybody else that, okay, the bottom's in and we're going to be looking for upside and the bounce to start now. So I'll buy my limit order for 3/4 of my position, and then I will use the last quarter as momentum to start to buy at the ask, to add the fuel to the fire, and to get that bounce underway. That's another strategy that I'll use. Let's see, what else do we have here on GDAX? Open orders. One thing that GDAX does not do that I wish it would do is tell you the averages of your position. I'm having to do this math in my head, and very, very often I'm just estimating at what my position is. So I'm estimating the different levels at what my profit is going to be, and that's really not ideal. And we need to see GDAX update that. I need to know what the average of my position is very easily, very instantly to help me with knowing where I want to scale out of my positions. So that's one thing that I have to go back and I press my fills and I have to see, okay, I got this much at this price combined with this much at this price, and just get a rough average of what my position is in my head as I try and establish my game plan from there. So this right now, this is a big bull move on ETH on the 5-minute time frame, and I look at the chart here and I would look at the 5-minute RSI and say, okay, how overbought are we? How much upside can we see from here? Nice big bull volume behind this move. RSI is not over 70 yet, so the bulls have momentum here. And again, the next resistance, looking at the hourly time frame, is not until first resistance 183 and then 185. I can see we have an increase in bull volume. I can see we have nice bull momentum, and we had an inside bar. So this is an inside bar that I was talking about, and we have multiple perfect examples. So here's our equilibrium pattern. Inside bar, this is the mother bar. The next range fits with inside the previous range, the high and the low. So it's a higher low, lower high. Third bar fits within that pattern, higher low. And I actually take that back. It did dip down there with a brief dip below that support, but it shows the range tightening. When you see these candlesticks shrinking up, it shows the range tightening. We see a spike in bull volume and a big bull break over all those resistances, and we know there's momentum to the upside. So where we stand from here on this space going forward on the daily time frame, looking at the daily chart, I do believe we are going to form an equilibrium pattern. So we had the big bull move to the upside. These are strong market conditions. Now the market has to take a breather, and the bulls and the bears are going to battle it out a bit. We have our high and our low. I anticipate a lower high to form. I anticipate it to form either tonight or tomorrow. If this pattern does not form and the bulls head back to a new all-time high, it will show huge amounts of strength in this space. It's not likely to happen. I would give it a 10 to 15% chance happening. That's just off the top of my head. But what I would be looking for is a lower high to form somewhere just under perhaps this 200 psychological range, maybe in the 190s. Not sure. It depends on the volume and the momentum. But I expect to form a lower high. I expect to consolidate and then form a higher low back down to the 160, 170 range. And I expect to see a tightening pattern on the daily until we see a clear break sometime, perhaps a week from now. So I will be watching this pattern very closely. We have a very strong, solid support now established down at 115.67. That's our low for the immediate future. We're not heading back to that price, in my opinion, anytime soon. I do think that the bulls have enough momentum through today to be looking up towards this $200 range. That being said, I do expect a lower high and consolidation to pull back. And then once this equilibrium pattern forms, if it does and then breaks, that break is going to be very nice trading opportunity with a more swing mindset. Swing meaning holding for a few days rather than just looking at these little scalps. So right now we are in a consolidation phase, really reaching an equilibrium and watching for the break. In terms of the hourly time frame, if the bulls can get over 185 on ETH, next main level is up at that $200 level, 199.99. So let's look at the same thing for BTC, and then I'll get to some questions here. So BTC on the daily time frame, same equilibrium pattern, but again, it's weaker than ETH. We have not broken the high of the 27th. May 27th has not broken, and it has broken on ETH. So that is a significant difference. And we have the equilibrium pattern here in terms of inside bars forming. This candlestick range completely within the previous candlestick, this candlestick range completely within yesterday's. And if I were to look at that on the hourly time frame, zoom in with my magnifying glass to get more details, I'm seeing our high, low, lower high, higher low, and watching to see where the break is going to occur. So I'm looking at the most recent higher low of support would be right there at 21.29, and resistance is up there at 23.43. So I would be watching for a break one direction or the other of this channel to indicate momentum looking into the next couple of days once that break does occur. So again, there's always things that I'm looking at in terms of the shorter term as to what is going to indicate to me momentum. So for Bitcoin, I did a video 2 days ago where I said we have our high of the bounce established, and it was up here. And if we break this level, the bulls have continued momentum because we will then have a higher low established and then a higher high. And that night we did end up breaking it, and the bulls have been pretty much in control since then. There's been pullbacks along the way, but they have had the momentum in their favor because we got that higher low and higher high. So just like I was watching this range to see which direction we break, I'm now watching that larger range to see which direction we break. And again, the probabilities of what is going to happen are going to change based on this shorter term action. So technical analysis, that's another thing that people do not really grasp. They think that technical analysis, they think that we chartists are saying what's going to happen in the future. I have absolutely no idea what's going to happen in the future. I know the odds of what's going to happen in the future. I know what is more likely to happen than not. Another casino example, just like people count cards in blackjack, when you're counting cards in blackjack, it's not telling you what the next card is going to be that comes. It's telling you the odds that it's going to be a face card or that it's going to be not a face card. It's just putting the odds in your favor. And over time, having those odds in your favor adds up. So that's what it is, all about consistency. And that's what I mean when I say that, we traders lose all the time. We just keep our losses small. And just like blackjack card counters, they lose often as well, but they win more than they lose. And that little slight advantage of having the odds in their favor long term definitely adds up and makes a difference over time. So every time I see something occurring on this shorter term time frame, it in my head is just shifting the odds as to what I think is going to happen in the longer term and how it's going to play out. So let's now get into some questions, and then I can look at some of the altcoin charts. Let's actually look at Gollum first, just because that is one that myself and some members are getting in. So we had the huge breakout on some more continued rumors of the Coinbase listing that may come. We're consolidating from that recently, but the bulls are still maintaining some solid control. And why I like this Gollum chart is because of the blue sky breakout potential. We've never been at these levels before. It's very easy for the bulls to move to the upside. And you can see there on the hourly time frame, once that volume came in, obviously a huge spike in volume, the price moved so significantly. We went from, 19 all the way up to 26 in 1 hour. So that is essentially a 35% move in 1 hour due to the lack of resistance. When volume comes in, the lack of resistance in blue sky breakout really sees significant gains to the upside. Anytime you're in a blue sky breakout scenario, that is ideal for the bulls going forward. So let me pull up, let's flip back over to my chart screen, and then I'll pull up the YouTube live here and start looking at some of these questions. So again, I'm not going to scroll back and read anything that has been posted before. If you want to ask some questions, look at some charts here, give me the tickers to the charts, ask me some questions, happy to answer them. I bought Golem in 3 different positions. I really got dumb luck on that one where, I was standing in the garden with my buddy and saying, what is the next altcoin to be listed on Coinbase? Whatever one that is going to see a big time move. And it was just me, not even doing any research or anything. And I have some friends that have done research on Golem and they are bullish on it. So I piggybacked a little bit. I said, all right, I'm putting profits in. Let's go for it. I got in my first position back here before the breakout occurred. And then obviously once this breakout occurred, I said, okay, this can really move here, blue sky breakout. So I added 2 more positions in the consolidation. I'd say my average right now is somewhere around 20. My first position was in the 15s and I added a bit in the 23, 21 range. So maybe I'm a little bit under 20. But again, I'm looking for 50 on Gollum if all plays out well. Stratus, and again, if you could put the tickers for things, it makes my life easier. I don't have them all off the top of my head. Stratus was actually the second one that I got in. I got in Gollum and I got in Stratus. I sold Stratus to get more Gollum when that breakout occurred, but Stratus is looking good here as well. And I chose this one as my second position because of the blue sky breakout, because of the lack of any resistance. And you can see the bulls saw a move over 14 and they shot right up to 16.5. So that is, a 20% move in 1 day very easily because of the lack of resistance. So any name that is at their blue sky breakouts is automatically stronger bullish than any other name instantly. That's just the way it goes. So any name that is in blue sky breakout, that's a name that you want to be in. If you're in a chart right now that is in a downtrend of lower highs and lower lows, it is not comparable in strength to a chart that looks like this, that's nothing but higher lows and higher highs with no resistance in sight. XRP. So this is the Kraken. So like this, I would not want to be in this chart. If I've got opportunity to be in bulls that are at blue sky breakout with no resistance, I would not be wasting my time in a chart that has tons of resistance. Again, if you're all fundamentals and you're looking long term, this does not pertain to you. But if you are looking to be a trader and you're looking more short term, looking weeks out, the resistance here, I could pick out literally 30 resistance levels right now on this chart
that the bulls are going to have to battle to get through. And I go back to that Golem chart and I go back to that strat chart, and there are no resistances to look at besides the all-time high that we just hit. So it's the difference between one resistance level and 30 plus resistance levels in terms of the ease that the bulls are going to have to see continuation to the upside. So right now I look at this chart and I can see resistance is at 2499. We can just call that psychological 25. I can see another resistance up here at 2899. Can call that 29. And then one more up here at 33. So there's 3 resistance levels right there, all from within 2 days of time. And support's down here at 20. So 20 support and 25 resistance is the current range to be watching. The bulls are trying to turn things around. They're trying to confirm bullish reversal candlesticks on the daily time frame. They're just fighting an uphill battle. Oh, that's another point. Thank you for pointing that out. Stop loss orders. I personally am not using stop loss orders on GDAX because I am always sitting at my computer when I'm in a position. If I were to go to sleep or go away from my computer for a day, I would use those stop loss levels. I don't like how easily the bears can drop the price down and trigger these stop loss levels. I saw them do it on the way up multiple times, intentionally selling significant amounts at the bid to trigger stop losses. And I know that it was intentional because right after it happened, the bulls showed up and ran to higher highs. So that is going on, which does make me less comfortable using these stop losses because I know they're intentionally being triggered. But if I can't be at my computer, that is obviously better than the alternative of not having a stop loss filled out. There's 2 differences in stop loss orders. There's a market stop loss order or just a stop loss order, and that means sell my shares as soon as this price hits for whatever price you can get. And then there's a stop limit. So you fill your stop order and you fill your limit order, and that says sell my shares as soon as this price is hit, but do not sell my shares if you cannot get at least this much. And that's the limit part of the order. So it's the difference between sell my shares no matter what and sell my shares, but only if you can get this price. That being said, if you can't get this price, there is the potential that your stop loss gets skipped and the price keeps dropping because you couldn't get the limit that you laid out. So there is the difference between those stop orders. Personally, if I were not at my computer, I would use just a regular old stop loss and say, get me out if this level hits. I just want my cash. So I'm using Coinbase. I transferred with a wire from my bank account. And the wire took 1 day, and the regular bank transfer took 4 or 5 days. And obviously that's lagged way down because, you know, Coinbase is seeing 600% increase in user activity. A lot of people are waiting a week to get their money, and it's very frustrating for people. And that's another aspect here where we do have, you know, new money is still trying to get into this space. GDAX does allow margin trading, but you have to lie. You either have to be playing with very significant capital, like millions of dollars, or you have to be a trading professional, or you have to lie. And I went through and looked at margin, and there are check marks that you can click. Are you this kind of person? Are you, you know, a business professional doing this? Are you doing this? And I didn't meet any of those criteria, so I'm not going to lie on this space. And that's another thing, you know, with taxes, we have to claim the GDAX is not going to be reporting our stuff to the IRS. I highly suggest everybody self-report their stuff. The last thing you want to do is get audited and be hit with a big bill sometime in the future when you're not prepared for it. I will gladly just be upfront, say I made this much, here's my money, pay it, get it out of the way. Don't have to worry about that in the future. Is there a potential you could get away with it? Yeah, absolutely. But that is not a risk that I want to take to get, you know, hit with a 4-figure bill sometime in the future when I'm not expecting it. So I will be reporting everything, and I will be, you know, staying on the up and up in that regard. When I'm buying these alt currencies, I am using Polo, never said this before, Poloniex. Poloniex. And that's a decent one to trade all of those alt currencies on. And it's a little bit less trustworthy than Coinbase in terms of security and in terms of all that. But if you want altcoins, obviously you're limited on Coinbase to the 3, unless Golem gets put on Coinbase and we all win. Scrolling through these questions here, bear with me. I do like poker. I played poker before I ever played stocks. I played poker back in high school. Went to Vegas and played for a while. Definitely similar mindsets. Risk strategy, it's all related.
Lots of good poker players and good stock traders. I'm not going to look at all of these tickers here. I'll look at some of them. A lot of them coming in. So our low has been set on XEM BTC. That low is down at, and these numbers are so annoying when there's so many zeros, but 5742. And now we have a lower high set at 1080. So that's the range that we're currently watching. It's a wide range. We pulled back fairly significantly from the top, but we did maintain higher lows. You can see we built a base of support down here in our equilibrium pattern back here with our high, low, lower high, higher low, bull break. Look at the volume indicating the bull break. And then we pulled back significantly, gave all of those gains back, but still maintained a higher low of support. So now we're watching for the equilibrium pattern. Our low, high, we'll look to pull back and set a higher low, lower high, and then wait for the break just like it happened back here. And Ethereum and Bitcoin have had this same pattern before all this euphoria and hype started. Look back 3-4 weeks ago, and these patterns were happening on Bitcoin and Ethereum on the daily chart. Consolidation would last days. Everything has been accelerated now where consolidation in this space is lasting hours rather than days. PIVX. So yeah, there's no PIVX here. I'd have to know the name. I don't know the name of the coin. I do believe that Bitcoin and ETH will set a lower high sometime in the next 2 days and then consolidate back down from there and establish a higher low, watching that tightening range on the daily. DBG. So yeah, if you can give me the names of stuff, because these tickers are not showing up. Rolling through. I do make a living off trading, although I do obviously have income from the chart guys at this point. But for 5 years, trading was my sole source of income. I was traveling around the country, trading as I went and enjoying financial freedom. There were times where I was trading stocks on my phone in the middle of national parks. Digibyte. Thank you. They might not have it on here. There we go. So Digibyte, same thing where we're pulling back, establishing our higher low of support. And this higher low is a must hold in the short term. If this level breaks, then we're going to see lower highs and lower lows. So that level's down at 441. Now the bulls are trying to recover. They have a very clear lower high pattern. And this is the kind of lower high pattern where I would want some more details. So I zoom into the hourly time frame, and I can see that the bulls are trying to turn things around. We went from lower highs and lower lows to now forming a higher low, and now we just need to get these higher highs. So resistance is 642, 7, and 726. Get over 726, and the bulls turn the trend back in their favor and look to recover after all of this significant consolidation that has occurred. So that's what I'm always looking for trends. We see lower highs and lower lows, and the change of the trend occurs when you start forming higher lows and higher highs, breaking the lower high pattern. So that's what I'm looking for in the Canadian MJ space. Let's go to that for a second, just because I really do believe that this is going to be a good long-term entry opportunity once things settle down. And look at this daily time frame. So look at this euphoria. Does this look familiar to you? Huge gains to the upside. We went from $4 to $18 in 2 months. And huge move, volume climax, hit our top, complete turnaround, and then we saw our equilibrium pattern. High, low, lower high, higher low, lower high. There's your bear break. We broke the higher low pattern, and then since then, we've consolidated very significantly. So we are in a very clear lower high, lower low pattern, and I am waiting for that to change to be looking to initiate a longer term position. And I'm looking at the weekly time frame. Look at how many red weeks in a row we've seen. The bears are in full control, and I'm looking for signals that indicate that is no longer the case. So I need to see a bounce off this low. I need to see a lower high set. I need to see consolidation and a higher low compared to the low, and then a higher high. That will indicate to me that the trend has changed, and I will gladly give up some profit by not buying in at the bottom to be sure that the trend has changed and to have that bullish momentum at my back. And when that happens, you're profitable in your trade literally from the get-go. And again, it's much easier to manage. You can set your stop loss at break even. There is nothing better in the trading world than having a stop loss at break even and knowing the absolute worst case scenario, it's like the trade never happened. And then you can just let the trade ride to the upside, see how much profit you can get, but just completely eliminating risk. The only time you can make risk zero is by having a stop loss level either in a profitable point or at break even. So I will always do that when I'm trading stocks. Stop loss at break even is my favorite thing. Completely eliminates any worry about the trade. LTC. So LTC clearly weaker than the other two. And again, I would not trade it for that reason. It's essentially trying to swim upstream compared to the other names. So on the daily time frame, the complete difference in the pattern is our high, low of the SegWit pullback, lower high, lower low. This is a downtrend. None of the other names have set a lower low from their top yet. So we have very clear resistance now, major resistance at 34.60. We have our lower low, so support is down at 17.50. We saw such a significant pullback. And right now we're seeing the bulls try and see a break. We've got an equilibrium pattern forming. These are inside bars. So we've got the range of yesterday fitting completely within the range of the previous day, range of today completely fitting within this range. And tomorrow, if we do not see a break of the range of yesterday today, then tomorrow we will use this range to indicate momentum and direction. So watch for a break of this daily higher low, lower high pattern. And again, if you want more details, you zoom into the hourly time frame and I can see my low, my high of the bounce, my higher low, and my lower high. So I can see the tightening range is already forming, and I can use these levels to indicate when momentum is shifting and to which direction the break is going to occur. To be honest, I know technical analysis, a lot of it is self-fulfilling. So self-perpetuating, honestly, I don't care. If it works, it works. I don't care what the reason behind it is. If, obviously the more people who use technical analysis, the more it's going to adhere to these rules. And that's beneficial for everybody that knows technical analysis. So I don't care if it's a self-fulfilling prophecy or if it's the nature of human emotion and markets. As long as it works, that's all that I care about. It's certainly interesting to think about. But other than that, if it works, it works. I personally love seeing tightening ranges because I know that a very clear trade opportunity is approaching. So Bitcoin is really tight, and I can look at this chart on Bitcoin on the hourly time frame, and I can say, okay, a break is going to be imminent sometime before tonight, sometime around tonight, because I can see that we're going to reach a flex point where we cannot get any tighter, and the higher low or lower high pattern is going to have to break. So right now the range, the tightest range to be watching is our low down here at 119 and our recent lower high at 13. So you can see how tight that is, and if I look at this daily time frame, it's going to show me a tightening range as well. Multiple inside bars in a row. Higher low, lower high. Support established down here on the pullback. Bulls need to break the lower high pattern on the daily. Look at the pullback. Every single day of this pullback, lower high, lower high, lower high, day after day after day. And we did just break it, but I can see that there's resistance at 14.2 and 14.4.
Bulls need to break 14.4 to get momentum back in their favor, and that would be a break that I would be comfortable buying. Live stream will be recorded. It'll have to process and stuff, but it will be back on the YouTube channel. So an example of a trade and scaling in. And again, I scale in. I will not scale in on bullish breaks of resistance. I will scale in on oversold bounces. If I'm making an entry on a bull break of resistance, I'm either entering as whatever I can on limit orders or buying at market to break that resistance. So let's see. I played a Bitcoin oversold bounce yesterday. So it was when the RSI was even below 20. And that was notable. And it did throw me off a little bit because I'm not used to seeing the RSI below 20. So I was scaling in on this candlestick. And I was entering 4 different positions on the way down. Just placing limits as they got bought to the downside. And then once it rolled over and hit a new lower low, with the RSI that low, even though I was in the red at that point on my trade, I'm not selling because I know a bounce is coming in the near-term future. And I look back at the history. I said, okay, RSI is under 20. Last time the 5-minute RSI was under 20, we saw an $80 bounce in a half an hour. So I was holding out. I believe my position ended up being at, let's see here, 2170s was my average. And we dropped all the way down to 2140s. So at that point, I was probably in the red, maybe $600 or so. But knowing that the last time we were at this level, an $80 bounce occurred, so I know a bounce is coming in the short term, and then I scaled out on the way up and was able to be profitable. So I went from, being down in the red had I sold at the bottom and scaling out on the way up. I believe I exited it all around the 2210s. So maybe my average was low 22s on that exit. But in the end, I went from an average in the 2170s to an exit in the 2210s. Saya coin. So whenever I'm looking at a chart, the first thing I do is look at the daily time frame and I zoom in from there. Nice breakout. Look at those huge blue sky breakout gains from 15 to 58. So 200+% move, 250+% move in 5 days. And we're now consolidating after that. That's not a sustainable move. This is healthy consolidation. I always look at the percentage in terms of the breakout. How much have we consolidated compared to the breakout? And right now we're at about 50%. So that's the bulls still in control. I'm seeing lower wicks on consolidation. So I'm seeing bulls buying the dip and I'm seeing declining volume. Bulls always want to see increasing volume on the way to the upside and decreasing volume on the pullback. This is a name that I personally would be looking to get into soon because we have our bottom currently at 259, and with this volume dropping off like this, I would be looking for the bulls to show back up, and I think we can see a move to 40 in the short term. I can see a lot of resistance here up at 43, 43.2, 43.6, 44.8. So I think that the bulls will have enough short-term momentum to get up to 40. But everything that's happened here on this consolidation, sure, we pulled back significantly, but it's very normal and healthy considering the size of the move we saw to the upside. So this is why learning technical analysis is beneficial. Even if you are long this coin and you're not touching it, you're not going to leave it, you're going to go long in it for a year plus, you would be able to sell in the 5s and buy back in the 2s or the 3s and increase your position. And like I said in one of my recent videos, I first got interested in this space by doing fundamental analysis on ETH. And because I was selling at the top and staying cash, when I rebought ETH down in the 120s for a trade, I was able to have 33% more ETH than I've ever had before. And that's because of playing the move on the way up, staying cash, and then, buying the consolidation.
So you are able to reinvest profits and add to your longer term positions if you can utilize technical analysis. That being said, if you try and do this without education, 500 plus hours, you really need the dedication and the motivation. If that's what I can inspire people to do, take your life into your own hands. Put in the time. This information is on the internet. It's here for us to learn. And if you put in the time, you have the dedication, the motivation, and the drive to do this, you absolutely can change your life. There's nothing that is stopping you aside from yourself and your own, life circumstances and motivation. So if you can learn how to do this, you can easily be adding on to your longer term positions by selling the pops and buying the consolidation. All right, I'm going to do one more here and then get outside. It's a nice day out. Don't see waves. Monero, Bitcoin on Bitfinex. Huge volatility here. So here's where you would definitely want to utilize technical analysis, where we go from 2.5 cents down to 0.17 a day later. That's a significant drop. But we do still have higher lows, although it's a bit of a double top. I would be a bit cautious of this resistance up here. We did get to an all-time high, but obviously the bulls didn't see much follow through. So our previous all-time high was 2.5, and we did get above it, but we could not close above it. And that resistance still knocked the price down. Good sign for the bulls, seeing a increase in bull volume today and seeing follow through to the upside. This is an inside bar breaking. If I were just trading this inside bar on the daily time frame, my bullish entry would be as soon as the high of this inside bar breaks, 0.01775. That's your break. That's your entry signal right there. And it's seen some nice follow through for these bulls. And that inside bar, again, if I were to zoom in on the hourly, I know for a fact that I would see a higher low, lower high pattern. And there it is, where we have our high, low, lower high, higher low, bull break. And look at the volume. Look at the volume as we're in our tight range here. This is where I would say a break is imminent. Volume is non-existent. And look at the bull volume pour in on the bull break. Traders are recognizing the break of resistance and jumping on board. So I appreciate everybody tuning in. And again, I'm going to keep putting out these daily videos, maybe not every day, but as I can. And this space is still a cash cow at this point. So we just need to be cautious, limiting our risk, keeping those losers small, letting those winners ride. And again, use this as motivation for technical analysis. Everybody that came in, the same exact thing happened with the Canadian MJ sector. I started making videos. Everybody loved them. There were thousands of people watching these videos, and they all poured in to want to know more. And I was very impressed by the amount of people that took the initiative to learn. And I cannot tell you how more prepared these people are compared to when they were trying to trade this Canadian MJ run before they had any experience or education to right now. We have Canadian MJ traders that are killing it in this crypto space because for the past 5 months, they have been studying. They have been taking the courses. They have been watching the videos. They have been practicing with paper trading, and they have been watching it play out live. And they are so much more prepared for this move than they were for the Canadian MJ move. And the same thing's going to happen here. We're going to get a wave of people that are motivated to study this subject and this crypto run. Maybe they can't utilize it fully on this crypto run. There's going to be another run at some point, either in the crypto sector, either in the MJ sector, some sector. In the next 3 years, this is going to happen again, and they will be able to strike on it, and they will be able to blitz it. So that is the goal here. Education, preparation, prepare yourself for life. Have a good life. Enjoy yourself. Have a good Memorial Day. See you all sometime soon.